ECIC, your export risk partner.
Hello and welcome. By all accounts, Africa does not have the infrastructure it requires to boost intra-African trade, let alone trade with the rest of the world. Let me give you, say, a few examples. Durban's congestion wars, ship berthing delays, and anchorages have all been well chronicled. Anyone who does trade in Southern Africa knows the nightmare that is Beitbridge. And of course, there's none in terms of train services other than the limited cow train. Think trade, think passengers, all inefficient. So the argument about financing infrastructure and or maintaining it is moot. So how do we do it? Do we have the money? What kind of money is required? And can we afford it? I'm Godfrey Mutizwa. My guests are Tshepiedi Moremong, Chief Operating Officer, AfCFTA. Pohani Hlungwane, Managing Director, Trade and Working Capital, ABSA Bank. Mandi Sinkuhlu, Chief Operating Officer, the Export Credit Insurance Corporation of South Africa. And Rian Kusie, Head Industry Planning and Projects at the Industrial Development Corporation. Thank you, lady and gentlemen, for your time. I think the issues are very well documented. They are very well understood. And the question really we want to address right at the outset is the issue of the availability of the money and the requirements for that money. I want to start with you, Tshepiedi, from an AfCFTA perspective. Just lay the ground for us in terms of understanding what is required and hopefully the amounts as well, though a number of figures have been bandied around, as I'm sure you are aware.
Thank you for that, Godfrey. I think you started off really being quite stark and, for lack of a better word, sort of doomsday. Yes, there is a significant infrastructure gap. There's significant gaps from a funding perspective. And the African Development Bank has made it quite clear that the deficit or the requirement is about $68 to $108 billion a year. So the question for many of us is, how is it that we look to solve and meet this gap, right? I think, as we're all aware, many of our African governments have huge financial constraints. I think pre-COVID, the constraints were already there, but with COVID, these constraints are even more stark. So the question is, how is it that we collaborate across the various institutions, not just our governments, but our development finance institutions, commercial banks, as well as global investors and institutional investors. A very important statistic is that on the continent alone, we've got $2 trillion of institutional capital. Institutional capital that is still not being deployed into infrastructure. Many of our institutional investors, so pension funds and the likes, are still not investing into this asset class. So how is it that, as project developers, institutions such as AfCFTA, how is it that we make it investable for these pension funds? And just very quickly, I think, Godfrey, before I move on, is, AfCFTA was actually set up by African governments. So the funding is 28 African government shareholders. We've got 2 African central banks, and we've got the African Development Bank as our anchor investor. So right there, an African institutions trying to meet an African infrastructure gap and deficit. So it's with these resources, and really our mandate is twofold. One, to make sure that we drive and create bankable infrastructure assets. One of the key issues on our continent is that the potential projects out there, but getting them bankable and ready for institutional investors as well as commercial banks has always been an issue. Secondly, it's really seeing how we can mobilize capital. So once we've created these bankable assets, how is it that we're able to catalyze private sector capital, institutional capital. So I think those are really the primary issues is how do we create bankable infrastructure assets and projects in our continent and really de-risking them for institutional investors to come through. And the final point is how do we look at our institutional investors' investment policies and mandates to make sure that they can enter and invest into infrastructure. I'll leave it at that.
Thank you for those thoughts. I've got a follow-up question for you. I attended, I think it was the annual meetings of the African Finance Corporation in Nigeria a few years ago. And the issue you raised around bankable projects was certainly one that was addressed and the work that's needed to move on that front. But before we tackle it, we've got a banker on the panel, so he should be thinking about the answer to that one. Before we go there, though, I wanted to tackle the issue of the political will for the financing of African infrastructure. You say Africa 50 has got 2 central banks. If my knowledge of Africa is correct, we should have north of 54 or 55 if you play the politics around Western Sahara. And then you talk about the African governments that are members. If I am correct, we should be talking about 54, 55. Why is Africa not united as one voice in this instance and putting together the resources that we do know exist into this project?
With anything, Godfrey, it takes time. I think the political will is there. It's just our ability to execute. And also, let's be very clear. I mean, Africa 50 is 5 years old. But more importantly, it's really about us bringing along our various governments. The political will is there. It's just that with COVID, the past few years have really seen our governments looking to see how it is they, one, drive employment, combat COVID, and look to see how they build back the economies.
Yep. Mandisi, let me come to you. Your opening thoughts in respect to the issues that we have raised. So really, overall, the will that's required for us to be able to provide the money that we need to build the infrastructure, and perhaps you can raise also some of the impediments to getting that money into the sector.
Well, thanks. Thanks, Godfrey. I think you're right. I think now the challenges of infrastructure of the continent are well known. But I suppose at this juncture, there are 2 key developments which could drive the impetus to address this shortfall in infrastructure. I think the first one I would like to highlight is the recently concluded African Continental Free Trade Agreement. It's important that as part of enabling more trade between the various regions of the continent and the various countries of the continent, we should then build infrastructure that links the various countries, that talks to border management infrastructure, that facilitate more effective and efficient movements of goods and people. The other second imperative is the move towards clean energy as part of climate change considerations. I think for Africa, there would be now available climate finance, which could be leveraged to fast track the development of renewable energy projects on the continent. Obviously, that will require collaboration between the players on the continent and from the developing countries. So there's opportunities there for convergence and fast track, this infrastructure development that we're talking about. I'll stop there.
Yeah. Is the will there in your view, though, when you look around the work that you have been doing around the African continent, the customers that you have been able to follow into the African continent, in your view, and also from the evidence of your operations?
I think there is will. For instance, you mentioned in your intro the Beitbridge border post as one of the thorny issues with the congestions that exist there. For instance, we've been able to be part of that project, pulling various players, South African commercial banks, Afrexim Bank, and ourselves with other shareholders. We're able to pull financing for the rehabilitation of that key border post. And what's going to happen there with new technology, it will fast track then the movement of goods and people. So you needed the support of the government of Zimbabwe and collaboration from all these different role players. So there is political will. Having said that, more recently, we've been seeing a lot of potential instability on various countries on the continent. So the political risk remains. So you do need political risk providers to insulate investors against the continuing political risks that we still observe in the various countries. Thanks.
Absolutely. Yeah. So Tsepiti said I was dark at the beginning, but if you spent time at Beitbridge like I have and seen the chaos that is there, I'm telling you, we would say we're pushing these political guys to move a little faster than they are doing, because not only are they impeding trade, they're making it impossible for integration to take place. Rian, let me come to you. Your opening thoughts as well. Just in respect to what we are seeing from efforts of the African governments. Yes, they have set up the African Continental Free Trade Area, but as Tsepiti said at the beginning, these things take time. I want to know if you are encouraged. I also want to know if you are seeing the momentum and the will that's required for us really to begin to tackle the gaps that we know are there.
No, thank you so much, Godfrey. I think there is always, the will is there. I think that is the first point one need to state. However, the action happened almost in two directions. There are continental-wide initiatives that is being driven, but then there are also project-specific initiatives happening that give flares of hope. You will see, for instance, that around projects, there are huge collaboration that you find between the different DFIs to try and find solutions, as well as commercial banks, in order to package risks and make it bankable. So I think you'll find increased collaboration and will from the different funders. I think also what you'll find, and the need, I really agree with Tsepiti, is to think that there's never enough projects to fund, purely because they need to become bankable. So the attention need to be given not only on project finance as such, but also on the project development finance to make these projects bankable. And I see more and more project preparation facilities, etc., coming forward. Another level that I can mention is that the continent is preparing. I know, for instance, in South Africa, in SADC's case, there is a whole gas master plan, natural gas master plan that is being developed in order to prepare inter-country utilization and positive exploitation of those resources to the benefit of the continent. You find, for instance, that master plans are developed, for instance, in the steel industry in South Africa, to ensure that our export finance of these South African potential steel products will feed into those infrastructural investments to ensure that the infrastructural investment actually result in localized supply of components. You will see that, for instance, through our the DTIC in South Africa is currently busy with the special economic zones, and there's specific focus on the two border SEZs, the Nkomazi one, as well as the Makado Messina one, where we want to not only address the logistics around those border posts, but also to create logistics parks adjacent to that to ensure the flow of goods and services. Fresh produce markets to ensure that local suppliers of smallholder farmers feed into those value chains. So the point I want to make, it's multidimensional. There are things happening, we are preparing, but there's one thing that one need to measure is the impact of COVID, which unfortunately caught us all by surprise, and we are adjusting to the new reality. And the whole progress in terms of vaccinations on the continent will be a huge driver in order to fast track some of these developments. Thank you.
100%. I wanted to follow up on the bankable projects issue. Tsapiti mentioned it, you have mentioned it. I want to know what's being done on that front. As I said, I attended an Africa Finance Corporation annual general meeting a few years ago, and this was an issue that was discussed. And I think if I remember correctly, there was a suggestion that the African Development Bank was among parties that was trying to ensure that this is available. Is this work that should be funded out to the private sector because we know they are quicker and faster and more agile? Or do we wait for our continental institutions like the African Development Bank or perhaps the Africa Export-Import Bank? I'm still with you, Rian.
It needs to be, there's not one solution. It needs to be from all angles, and it needs to be project specific. So it's very high risk activity, project preparation in a sense, because you might go into the project development and ultimately you find that the project is not bankable. So it requires a huge risk appetite. For funders. So there need to be special arrangements around that. And one cannot expect commercial funders as such to do that. So it needs to be collaboration from bankers, but I think it also needs collaboration from experts in terms of assisting, the technical assistance requirement to do so. And that is quite often need to be funded by grants. So I know, for instance, in the IDC case, in the past year, we have separated our project development activities from the rest of our funding because we just realized that it is so important and it needs to have special emphasis. I also know that institutions such as Investment South Africa has put together teams from different DFIs in order to resolve those issues around specific projects that is earmarked by Investment South Africa. So again, not one answer. It needs to be collaborative, and quite often the solution need to be on a specific project basis, because quite often some project or support providers see the benefit of this specific project. It might be a digital economy one. So one could potentially attract large companies to assist. So there could be a role for private sector to play if there's an interest in that specific project. And of course, those private sector guys might not be keen to participate in a fund of funds or a big scheme, but might be interested in a specific project. Thanks.
Well, let's find out. Let's find out, because our next question is going to be to Bohani. Bohani, I want to know from your perspective, is this is work that perhaps can be done by the banks, but I also want your opening thoughts on the conversation around trying to ensure that we're able to finance this infrastructure that South Africa and the region requires. I just wish I could ask you if you were able to say 1, 2, 3 in terms of the issues that should be addressed. This would be the way to approach it. I know I'm making it difficult for you, but you have a difficult job anyway.
Very good morning, Godfrey, and to my fellow panelists. I think there are a number of issues that have come up in this discussion, but maybe a good start for me is to maybe let's address this question about political will quickly, to say that as we are today, of the 54 countries that have signed up to the Continental Free Trade Agreement, 38 of those countries have already submitted articles of ratification and have also, in addition to that, agreed on a schedule of tariffs for which zero tariffs will be applicable, schedule of goods for which zero tariffs will be applicable. In addition to that, there has been an agreement on about 80% of the goods lines in terms of where rules of origin should be applicable.
Right.
So as it is today, a number of those countries can actually enter into a preferential trade relationship, right? So I think it's important to say that whilst we have certain challenges, and nobody should run away from those, we should also acknowledge the fact that there has been a lot of progress since January 1. But I also do want to address this question of why is it financially viable increasingly for this infrastructure to be developed, or for investments to start flowing into the various kinds of infrastructure. And by the way, I know we're talking about energy, ICT, transport, and so forth, which is quite critical for the successful implementation of the Free Trade Agreement. I think the critical thing here, it's very important that I think it's contained in the very nature of what the rules of origin mean. It's very important in that it means that the rules of origin themselves define the types of goods and the value add that must occur in countries. And what does that mean? So it means instead of us importing these goods from the rest of the world, we can add the value in the countries. And when we add the value in the countries, then we then qualify for the zero tariffs. Now, this is very important for the preferential trade relationships. This is very important. So the question, it's actually about the value, the cost of the value add versus the benefit that countries would start to actually experience as a result of the preferential trade agreements. It's an important point in that it talks not only to industrial productivity or industrial production, it talks to the very fact that the same infrastructure is what is required to facilitate the trade flow. So it enhances the very distribution channels we're looking for. So I think, it's important that whilst we're all cognizant of the challenges, and one, as I indicated, cannot run away from those, there are a number of positive developments that are making it increasingly attractive, not only for the traditional financial suppliers in Africa, but also for new entrants to come in. I think Tsepedi spoke about this. The question is not the shortage of funds. The question is the shortage of bankable projects. Right. And in bankable projects, let me just finish here, Godfrey. It's the question of course, feasibility, it's the question of viability, it's the question of liquidity, it's the question of value generation, but also it's the operating environment within which these projects actually occur. And that's the value of the free trade agreement, to make sure that there's a legal and a regulatory framework under which these projects are actually occurring. There's clarity in terms of the political and economic environment as demanded under the free trade agreement in terms of the operating environment. And lastly, of course, there is value in the particular sector that we're looking at. In other words, the sector has to be aligned with where the gap is, right? And we all know that it's in energy, it's in ICT, and it's in transport. Thank you.
Okay, so I've got a double-barreled question for you, if you can answer those two quickly. Number one, how busy are you on projects connected to the intra-African trade? I'm asking you this question because since the beginning of the year, I have been looking for companies that have started under the AfCFTA. As you said, there are countries now that are ready to go and drop the tariffs and trade under the conditions of the AfCFTA. But we continue to hear that it is not happening yet. It takes a little more time. How busy are you, say, in respect to that work?
Very busy. I think not just us.
That's a nice answer.
Many, us as APSA Group and many other financial institutions. And maybe let's take a step back here. The question of intra-Africa trade, which I think we all know it's about 18% or so, give or take. As it is today, that very trade is being financed by a number of banks, including ours. And increasingly, we're seeing not only the ask around, facilitating these trade flows, but also the ask around investment. And this is why phase 2 of the free trade agreement is critical, because it talks to the protocol on competition, on investment, and on e-commerce, right? Of particular interest to me is on investment. So I think what is happening today, if you look at the various conversations we're having with financial institutions, with development financial institutions, and many other players in this space, we're seeing a lot more conversations around various ways that we need to think through in order to provide financing. We as a bank are seized with this question in multiple ways. And I think we all know this. For example, if I may give a practical example of the trade financing gap of about $100 billion, give or take, that exists in the industry. To say that I think we need to take the conversation to the next step, which is what we're doing as well. It's what are the most practical ways to start eating into that gap, right? Beyond the normal, standard, traditional financing issues that we know that require security, so forth, and all of that. And there is a lot of conversations that we're having around whether it is providing bid bonds and guarantees linked to these kinds of projects that we're talking about, or providing financing in terms of, purchase order financing and so forth, and all kinds of financing across the value chain that we, not just we as bank, in fact, there are multiple conversations, and we as APSA have entered into multiple agreements with many DFIs, some within the continent, some outside the continent, in order to try and solve this financing problem.
Bohani, you and I, after this, need to sit down and talk, and I want to know what kind of projects you are working on. You don't need to give me the names of the companies that are doing it. I want to have an idea of where they are coming from, the sectors they are in, so we take this conversation forward. Sabide, I'm coming to you. Feel free, by the way, to contribute any thought you might have to add to the points that have been raised by the gentleman here. But I wanted to address the issue of de-risking the projects. And I know this is a question for the ECIC as well. How do we do it? Practically. We know this is an everyday issue that companies are grappling with. And we know, of course, most of the African countries that we call home are rated grades that make the cost of capital expensive. Please help me understand. From an Africa 50 perspective, how do we go about doing this?
Thanks for that. And I will actually address a few points from Bohani, but to address your question on how does one look at de-risking, I think it first starts with the sponsors. Are you backing a credible sponsor with a track record who has done this before? That, to me, is a first step to de-risking any project. Somebody who's done it before, somebody who lives and breathes it on a daily basis. The second part is obviously going to be, I think Mandisi, spoke about political risk insurance. The second part is going to be around currency, right? Our biggest issue, more often than not, these are long-term contracts, power purchase agreements, offtake agreements that countries enter into, utilities enter into, and commercial banks enter into. Yeah. More often than not, dollar denominated versus the fact that we're, local currency revenues. So how is it that, one, we deepen our capital markets? That's going to be critical, that we can't always depend on hard currency in order to fund and finance our projects. So how is it that we deepen our local capital markets? We look to use local currency in order to de-risk. That's going to be a critical factor.
Absolutely.
I think we've seen that our hedging markets are not deep enough, in fact, to be able to cater for this. We've done it and we continue to use it. We use wraps such as ECIC. We use other, partial guarantees, etc., to do this. This has been happening for many years and it will still continue. But I really think we need to expand sort of the tool set that we've been using to date.
I think I want everyone's thoughts around this de-risking issue. So I'll come to you, Mandisi.
No, thanks, Godfrey. I think the political risk issue is a real one on the continent that we cannot shy away from. We've seen more recently some of the governments being changed by military coups, and in some of the countries where we've seen emergence of insurgency activities and civil conflict, open civil conflict. So those things do impact business confidence and appetite of investors to invest, even for lenders as well. So an institution like ourselves, Afrexim Bank, African Development Bank, we play an important role in addressing some of these political risks. In our case, for instance, we would look at some of the elements of the political risk I've mentioned, war and civil disturbance, and we provide political risk insurance for that sort of risk. That helps investors who want to make a long-term investment in some of these environments So on the back of our cover, obviously within their own risk appetite as well, then they're able to make these long-term investments in infrastructure. So through this product, we're able to crowd in investment and long-term finance by various financial institutions into these types of projects. So the issue of political stability is one of the essential elements for the political environment and investment environment to thrive. And obviously, alone will not be sufficient. I mentioned African Development Bank, Afrexim Bank, and many other private sector role players who are able to do that. But more recently, in our case, our mandate has been expanded to look at short-term trade coverage in positioning ATSA for the opportunities that will emerge from the African Continental Free Trade Agreement.
Yeah.
And this way, what we're looking to do is to reinsure existing insurers, so to spread the risk so that they can increase capacity, available finance to various trading companies, then to take advantage of the trade opportunities.
Yeah.
So that is going to be a big element of the de-risking, because one way of de-risking is to share the risk on a broader pool. Thank you.
Yeah, I think I'm very happy that you raised that issue, because we did see with the recent riots here in South Africa, Sastria coming through and saying they were able to cover it. And then I think a few weeks after that, we heard them saying, oh no, they needed to go back to the government to see if there was more money that was required. So my question to you is, are you adequately capitalized to be able to handle the extra work that potentially could come with a bigger growth, if you like, in intra-African trade?
Yeah, I think we've been in existence for about 20 years now. This is our 20th anniversary. I think in the past 10 years, we've grown our capital base. Fortunately, we're one of those state-owned companies in South Africa now, which we have a strong capital base, which you can leverage and then to drive this intra-Africa trade agenda that I've been talking about. So that's one of the reasons that the government and our Minister of Trade and Industry and Competition has been able to expand our mandate into the short-term trade space so that we can share risk with the existing role players. So we are fortunate in that sense that we do have the capital and we do have then the know-how to be able to enter that space and drive more activity between South Africa. Well, South Africa is more concentrated in the SADC region.
Yes.
And what we want to catapult is to catapult our companies to go to other regions of the continent.
Yeah.
Francophone countries, West Africa, East Africa. So I think that infrastructure leg, which we're talking about, is going to be key in connecting countries on a cross-border basis.
Yeah.
And I think we're ready. We are well poised now to enter this new decade, which I can see that lies ahead.
Yeah, quick question. I'm sure you heard my question to Bohan around how busy he is. And he said he was very busy. I want to know if you are busy and what you are seeing in terms of the interest that's coming onto your table.
Well, we're busy enough. But obviously, there's always room to be more busy, as I've mentioned. But we're looking at projects, for instance, in Ethiopia, in Ghana, in Mozambique, and the various projects. When I mention these projects, these are huge projects, which most of the people in the market will be aware of.
For sure.
Telecoms, rail infrastructure, gas-related power plants. So there are a number of projects which are in our pipeline.
Yeah.
But obviously, we also want to support the smaller role players. That's why the short-term trade focus.
Yeah.
I think that's where the shift now is going to be.
I'm going to come knocking on your door as well, like I promised Bohan. I want the two of you guys, Rian and Bohan, to give you your thoughts as well on this de-risking issue, very quickly if you can, because we need to talk about the source of the money that we require and which money is best suited for infrastructure. And I know that's a contentious one, but we need to tackle it. Okay, so let me go to you, Rian, and then I'll come to you, Bohani.
Yeah, I think I agree with my fellow panelists in terms of the de-risking. I just want to mention one aspect which is concerning, is of course the sovereign debt issue, and given where we're going, that risk could become higher in a sense. So we will face that in the near future, and as many of the infrastructure projects is based on sovereign guarantees, it poses a risk, and we need to think of areas how to address it. If I can just talk about busyness, and I want to talk about larger industrial projects, which is a bit more our focus, not necessarily infrastructure. We see a lot of activity and interest, for instance, in the mining and the battery mineral space. In the continent, in terms of moving into the EV market globally. So there are really interesting initiatives there, and of course there's huge benefit from the current commodity boom that we are experiencing, where we see interest in some of our standard commodities that we export, and therefore value-adding opportunities in terms of those. Just to mention that as an opportunity that we really keen, or we see. The other area is, of course, private sector provision of infrastructure. You'll find that large companies actually invest in cold chain facilities themselves, or funds being established to do so, for instance, in East Africa, etc. And those initiatives should not be disregarded, although smaller, but it does make an impact.
Absolutely. Thanks for that. I wanted to say to you, I was reading earlier this morning when I was coming in that apparently there's new technology that's been found that's able to make batteries that last longer, but not using lithium. So you might want to warn your customers. Technology is great, but I think it can leave you in the ledge. Mohani, let me come to you as well. Very quickly, if you can, your thoughts on de-risking.
I think the normal standard, solutions like political risk insurance, syndicating the risk across multiple players, as well. I mean, selling down the risk and all of that, but also getting in technical expertise, because I think part of the challenge with respect to projects, it's not around the financing only. It's also around project expertise and the ability to be able to complete those large-scale projects on their agreed timelines. And then, of course, in addition to that, the standard normal financial products that manage a wide range of risks, from performance to credit risks and so forth. But I wanted to make this point to say, I think, beyond these normal standard products, I think there's a challenge that we do have as, financial institutions, both DFI and commercial banks, to say, it is my view that if you look at the development of various regions, so whether it is Southeast Asia, or whether it is, NAFTA, or whether it is the EU and so forth, at the center of that, of the development, of the economic development of those regions, it's very strong home-based local financials or regional financials who understand the risk much better than partners outside. And I think the challenge we sit with as these institutions is we must be leading in quantifying and understanding the risks. My view is that oftentimes there's a whole lot of perspectives and perceptions around Africa risk that are not necessarily based on fact, if I may put it that way, but based on conjecture that comes from, Africa as, all of these historical issues. In actual fact, if you do the work and look through the continent, right, you can realize that although Mandisi talks about, some of the areas where we had problems, the number of active wars today, it's probably at its lowest in 20 years. If you look at the number of other factors in terms of the economic state of the various countries, whether it's debt to GDP and all of those kinds of things, whilst we have problems here and there, a number of our economies are actually in a better shape. COVID, of course, did come in and prevented specific challenges. And by the way, in my view, whilst COVID presented challenges, it also presented opportunities, because one of the issues, and that's why we're having these discussions amongst other things, is the fact that we had problems with access to financing, access to PPEs, access to vaccines, which on the other hand means that we must accelerate the investments in the kind of infrastructure that will enable these vaccines or PPEs and many other goods and services to be available within the continent. So in other words, the creation of regional value chains has become even much more critical for the African continent. And it is very critical that we lead as financial institutions in Africa on the understanding, the quantification, and the management of risk in our various countries.
Yeah, one of the infrastructure pieces we need to address is the one that's just hit Tsepidi, and that's, of course, telecommunications, because we have to build reliable, functioning telecommunication systems across the African continent. And I wanted to say, you guys have just given me an idea about the program. We need to talk about the progress that's being made in getting companies to trade across borders and talk about the sectors that they are doing it. Tsepidi, you wanted to add 2 points. If you've forgotten your 2 points, however, I want us to move on and talk about the issue of the money that we should be plowing into infrastructure. The story has always been we need to get pension fund money into infrastructure. It's long-term, it's the kind of pension capital that's required for the infrastructure, but somehow we're unable to do it. In South Africa, a start has been made. I want to know if you think that's a solution, but also widen it to the rest of the continent and speak to perhaps issues that could be addressed.
Thanks, Godfrey. Yes, I think, my little issue is actually, I don't think it's more telecommunications, it's around maintenance, right? So
right.
Power outage, we always focus on building new infrastructure. I think the other focus that we need to drive is around the maintenance.
Yeah, is that what just hit you? Was that a power cut?
Yes, it was.
Oh, man.
So I think, telecoms is one thing, but I think power and stable power is critical to industrialization. I caught Rian at the end talking about industrialization. Around patient capital, I think everybody is in agreement that infrastructure requires long-term patient capital. South Africa has made a great step, right? So I think Reg 28 is critical in being able to unlock capital. I think more importantly for me, it's also around unlocking transparency and accountability for both pension funds and trustees. It incorporates things around, ESG, so environment, social, and governance issues, which we don't talk enough about, right? I think for us to be able to really drive sustainable infrastructure, we need to look at ESG and how it plays a role with all of the infrastructure assets we bring on board. So South Africa has started. It would be great to see more of this being rolled out across our continents. Traditionally, we have seen pension funds invest in T-bills, invest in government debt, invest in real estate. We really need to broaden the sectors within which they invest and really ensuring that they're matching their liabilities with these long-dated assets. I think it goes without saying that there's a symbiotic and there's symbiotic relationship and alignment between pension fund money and this infrastructure asset class.
Yeah, and the money that has come to you in support of our infrastructure development, what has been the main source of that money?
It's been a combination. I think, interestingly enough, it's been a combination of both commercial funding, DFI funding, and pension fund capital. I think more and more you're seeing pension funds looking at alternative asset classes. So private equity is something that's come into play, and lots of pension funds are looking at it and have seen it as a credible asset class to invest in. So we're seeing it's been a cautious approach, but we really are seeing momentum in tapping into pension money.
Again, this is open to all of you guys, so if anyone wants to make a point on it, please feel free to come in. You can interject and talk about it. I asked, yeah, we got someone who wants to come in and contribute, yes?
Yes, yes. I just want to emphasize that point. I think, the requirement to decarbonize our different sectors is very relevant for the continent. And I think it also, and the whole ESG argument is becoming very critical. So the issue is that also come with new potential sources of funding, because the whole world is looking differently at these aspects now. And I think we're going into COP26. And I think we need to, as a continent, really try and attract all different type of funding to enable us to, for instance, I'm thinking, for instance, on the hydrogen economy and the potential that it could offer for the decarbonization and also some of our energy problems. There are specific countries, I know, for instance, Japan and Germany, etc., that is very keen to engage with the continent and not only facilitate the transformation, but also to fund some of those projects. And I think we therefore need to think a bit differently and see how we can, through the just transitions that is happening, moving away from coal, how we can leverage those funds. But it's very important that these projects need to be very good in terms of its ESG requirements, and there could be new sources of funding. Thanks.
Absolutely, absolutely. Anyone wants still to talk about source of funding and whether pension fund money is the solution, or whether we should also be looking at our foreign exchange reserves? Many people over time making the point that we are parking this money in jurisdictions where they are earning 0%, 1%, sometimes negative returns, paying people to keep our money when we should be bringing it home. Anyone wants to pick up on that one? Andisi, you want to come in? Bohan, you want to come in?
Yes, I just want to come in that institutional investors have been quite active in the infrastructure space. Whether you talk companies like, we've worked with PIC, Old Mutual, and many others. But you're right, obviously, there's a need to escalate the level of investment. So that's one source of funding that needs to be leveraged, probably a lot more. Mm-hmm. But what Rian mentioned, as I've said earlier on, with this focus on climate finance or renewable energy projects, and the transition, the just transition people are talking about.
Yeah.
There's other pools of finance outside of the continent that needs to be leveraged. So it's A finance, but there's also opportunities for grant finance and concessional lending opportunities. So we would need to look for blended solution, because that may assist addressing that earlier question you raised about the bankability of projects. Some of the projects, for them to be bankable, they will need a lot more blended finance, which includes grant funding, concessional finance, and export credit finance as well, as part of that mix, including the institutional investors. So we must broaden the pool sources of funding in that way. I think the use of local currency finance and deepening those markets was highlighted.
Yes.
I think in the long term, that's a space that needs to be explored further. Obviously, the role to be played by African Development Bank as a catalyst towards those initiatives, I think that's key. So we do need to find solutions that how can we, increase the limits or the tenors for local finance.
Yeah,
that's also a key element.
100%.
Thank you.
Yeah. Rian and Mandisi, I'm working for the devil here a little bit. Africans like myself will be asking, why are we talking about decarbonizing our power sources when we have no electricity? Hello, 600 million Africans are in the dark already. Give us some power, please, before you talk about clean power. Anyway, let's park that. Different argument. Another day we'll talk about it. Mohan, you wanted to come in?
Yeah, maybe just to come in here, and I think Mandisi touched on a bit on the point I wanted to touch on, which is, I think what becomes more important is the collaboration going forward with various development financial institutions. So between private financial institutions or commercial banks and development financial institutions in the form of ECAs and many others become quite key. And I think he did touch, for example, on the increased focus on ECIC into short term. And I think we've recently been in conversations with the ECIC to do one particular transaction. I think what I see as critical is making sure, because there's multiple DFIs, and just if I look at the ones who we have agreements with, and just simplifying and making sure that various players in the market can understand the requirements to be able to tap into those financials or into those facilities.
Yeah.
It's a bigger challenge than, in my view, in my experience, because we sit with a number of days, and when you look at the utilizations of those, you kind of realize that maybe there is not enough publicity, there's not enough understanding. Some of them are sector focused, some of them are, whether it's in agriculture or whether it's green energy and so forth. But I don't think there's enough publicity and enough understanding of how we can utilize those. And I think it will be critical to tap into those, both in terms of direct financing as well as guarantees. Thank you.
We have about 6 minutes of the show left, so I want you to think about wrapping up your closing thoughts in respect to what we ought to do. So in the lead up to that, I've got a question around what we need to do in order to be able for us to ramp up the work that's required. I asked in the notes that I sent to all of you whether the last time that you had heard about PIDA, the Presidential Infrastructure Commission Coordination, I can't remember the full name. And I'm asking the question, and I'm asking whether we need a platform that enables us, all of us, from an African perspective, to be able to see where these projects are, or whether we should be doing that regionally. Because this national focus, in many cases, someone was making the point the other day that with those national focuses, we're losing the objective of the creation of the African Continental Free Trade Area. So let me come through all of you. Tsapiti, I'm starting with you. Very quickly, your thoughts on that, and you can then also wrap up your final thoughts.
So Godfrey, PIDA is close to our hearts as Africa 50. We are actually born from PIDA, in that through PIDA, African Development Bank realized that because there was this significant infrastructure gap, we needed to look at things differently. We needed to look at seeing how we drive project development, and specifically set up within Africa 50 a project development arm. So PIDA may not be known by lots of people, but we are the genesis. We're the genesis of PIDA. Regional versus national infrastructure projects, I think we need both. You cannot, to me, it's not a binary approach. You need to be able to put in road infrastructure to get goods from the village to certain markets. We need to be able to transport manufactured goods and services between one country to another. So with regards to, so I think it's really important that one, we take both the national and regional approach to how we look at infrastructure.
Yep.
Technology, I think we haven't spoken enough about technology on this platform. And how is it that we utilize technology to be able to, one, register the various projects that are being done, to be able to bring together funders, potential project sponsors, to be able to drive and implement these projects. So how is it that we use the latest technology, blockchain, et cetera, to really be able to position and showcase the various projects that are happening on the continent? So how do we digitize it more? And I think we've realized all of us are sitting either in our homes or in our offices, we're having a conversation. So how is it that we utilize technology to bring players together, both locally and globally, to drive implementation of infrastructure on the continent as a whole?
Great,
so do we need a national and global platform? We definitely do.
We definitely do. Thanks. Rian?
Yeah, I'm in agreement. A platform is good. But it's quite interesting whenever you have a good project, the different funders run to it. So I also need to re-emphasize the fact that these projects need to be de-risked from a political level and the different to a commercial level, and the importance of strategic equity partners that give comfort to project people or funders to actually get involved. I think what will be very important is that we will be delayed if we don't roll out our vaccination campaigns on the continent, because I've seen projects that came to a halt because of travel restrictions. And I think it becomes important that this is actually addressed as a complementary issue to the problem statement. Thank you.
Absolutely. Bohan?
Thank you. I'm thinking, Godfrey, of how do we leave this? I think for me, it is important that we reflect on the fact that whilst we are seeing multiple challenges, and some of them actually highlighted more by COVID, it's also important to realize that we've brought together as a continent 54 countries that translate into over $3 trillion, over 1 billion people, into a single market. And we've probably done so in the fastest possible time compared to when the WTO was put in place in 1994. And whilst you could look at the numbers and say that only 17 or 18% of trade intra-Africa is intra-Africa, and maybe only 1% of steel manufacturing is from Africa, 3% of global trade is only intra-Africa, 3% of GDP, global GDP is only from Africa. All of these things at the same time provide an opportunity for us to be able to come up with workable solutions that continue to take us forward. And in my view, the very fact that 9 months later, you've got over almost 40 countries that have signed up to the free trade agreement. You've got an agreement on rules of origin on a lot of goods and services, goods in particular. You've got, those countries having ratified, also submitted, articles of ratification, and in a position to commence trading is indication of both the will of the, governing countries or the political sector, as well as the private sector will. Because I think the issue about the Continental Free Trade Agreement, it's not just an initiative that is there because it makes sense for us to get together. It makes a lot of sense because there's economic opportunities. And those economic opportunities, of course, require financing. 100%. And we as financiers need to continuously think about what is the best way to put financing on the table. And I think, conversations like this are quite critical to making sure that we come to the party.
We will come to the party. Mandisi?
I guess infrastructure is important, but what is also necessary to enable this better trade among the African countries is further collaboration on border management, so that we could have one-stop border posts. So it talks about more collaboration, but also harmonization of standards and procedures so that there's efficiency in the movements of goods. So if we want to have a continental trade agreement, those are essential elements if you compare what the EU has been able to achieve. Thank you.
Very much indeed. The hashtag to follow is at ATSA 2021 if you would like to continue with the conversation. Thank you very much to my guests. Let me just remind you again, Mandisi Nkulhlu, Chief Operating Officer, Export Credit Insurance Corporation South Africa, ATSA, Moremong, Chief Operating Officer, Africa 50, Mohani Hlungwane, Managing Principal and Head of Sales at AfCFTA Group, and Rian Kusia, Head Industry Planning and Project Development Unit at the Industrial Development Corporation.
ECIC, your export risk partner.